The New York Stock Exchange now is Justin Whitehead, who's the CEO founder of Pebble Finance. Justin, thank you so much for your time today. So AI is eating software's lunch. At least that seems to be the concern out there. We got you on a good day because, just at the top of the show, I did bring our viewers that story about the fact that some of these brokers are being hit. I mean, your Raymond James, your Stifels of the world, on Altruist launching an AI-powered tax planning feature on its Hazel platform, basically managing to aggregate your pay stubs, etc., and spit something out within minutes. I'm just wondering, as we look at the hit on some of those names, if you believe some of these reactions are a bit overblown or they're justified.
So today's reactions are just the pattern. These reactions have been happening actually over the past 12 months or so. I would say everything is overblown in the short term, but if the Stifels of the world and Ray J's of the world aren't reacting in a timely fashion, it's ultimately going to be a big problem for all these firms. Overblown in the short term, but larger over a longer time span. AI has a much bigger impact than I think anyone is really realizing.
What do you mean by that? Because the trading performance has been one of dump stocks, ask questions later, throw the baby out with the bathwater, all those kinds of lines, SaaS apocalypse, loan again, and I could go on forever.
Yes.
But those are the headlines. Could you give us a little bit more context?
So everything right now is that knee-jerk reaction that you said. The reality is you've got established enterprises in financial services, in all different types of sectors, who have had for the past few decades these long established business models, ways of doing things. So like in advisory, where Stifel and Raymond James are obviously playing a big role, you have advisors collecting 1% fees so that this advisor can have a conversation with a client and be just a little bit ahead of you on the market. That's going away. The type of value that the wealth advisory space needs to be able to deliver in clients in 2026, let alone 5 years from now, is going to be a completely different bar that people have to hit, and it's going to be AI that's going to help advisors and these firms actually achieve that.
Okay, so maybe the reaction is just a bit of a knee-jerk, as you say, a bit overblown. I mean, that certainly seems to be some of the view out there, because the thinking here is perhaps what you're saying is we need to sort of learn to work alongside the AI.
You do, and AI is not going to replace you. It's not going to replace the handshake, but can certainly give you a helping hand.
Right.
Not all businesses are going to be equally disrupted by AI. The way that I kind of frame and think about it is you have to look at existing industries and figure out what type of moat they have. Some industries have a data moat, like they've got something that's unique and proprietary from a data perspective, and some people are just building on top of data that anybody can get. Think of a financial services company that is collecting proprietary information versus a CRM system that is just using the client's data and giving them a nice viewer on top of it.
Okay.
If you don't have a data moat, AI is going to come and eat your lunch.
Okay, so what about like Datadog, for instance, today?
Yep.
This is the line that stood out to me. I mean, this is one of our best performers on the S&P 500
Sure.
today. The company makes its money from selling analytics platforms to companies like AWS and OpenAI, and what it says was driving the revenue was the customer migration to AI. Is that the story that software needs right now?
Absolutely. For the firms that aren't adopting AI whatsoever, you're gone in 5 years easily. The Datadog itself is selling tools for monitoring your compute and all that type of thing, which is probably actually a lower level than like what's moving. This is not related to the Raymond James or the Stifels of the world.
No, that's separate. But then, okay, with the whole Anthropic episode last week, which seemed to be the sort of catalyst as far as the headline that really rocked the boat, and we saw that sell-off accelerated. Was that legit? I mean, was that warranted, or was that a little bit overblown as well?
So again, these types, so that caused what, a 5-10% drawdown in a lot of your enterprise SaaS stocks?
We saw a correction.
You saw a correction. These corrections were happening prior in the summer. Every time companies were selling data to Anthropic or selling data to OpenAI or Perplexity, you saw these segments also going down. So people have been pent up and they're waiting for Anthropic to just come and eat people's lunch.
Yeah.
I think what's going to be super interesting as we head into earnings for a lot of these companies. I bet a lot of these companies are going to be, a lot of the executives at these firms who have these big drawdowns, all the focus is going to be on your response to Anthropic. What is, like, no more of this talking about how AI is in the pipeline and these lofty dreams of it transforming the world.
Right.
No, you need immediate action now, because now people are seeing the impact on your stock.
Right, okay. So what has got to change? What have these companies got to say that's going to define the winners and the losers when you talk about these moats? I mean, what do these moats look like? I don't know if you can give any names, or you can at least sort of characterize the companies that would benefit from that and who are going to be left behind.
Yeah, so I look at, do you have anything proprietary from a data angle? Do you have anything proprietary from a process angle? You could have, up till now, built a very successful large enterprise company without any proprietary data and without any proprietary process on top of the data. Mm-hmm. Simple data companies showing dashboards on top of your data or something like that. If you have either proprietary data or a proprietary process, you're at least half safe. Mm-hmm. For those, and then for those that are both proprietary process, so think of proprietary process in financial services would be people that focus on analytics or something that has very keen industry knowledge to the segment that you that they go ahead and target. That's defensible. AI isn't going to come and replace a whole bunch of hidden math that's stuck away in textbooks and that type of thing. At least not on day one. Mm-hmm. And proprietary data will always be defensible. But I think what a lot of companies are finding is they're susceptible at least 50% to being disrupted by AI in one shape, form, or another.
Okay. When we look at technology, I have heard this view out there that maybe the market's getting a little bit over its skis as to how much we are rewarding these companies versus the actual true real-life benefit in our own lives. I mean, you and I have probably used AI multiple times today, but at the end of the day, are we getting as much out of it as we are rewarding these companies as to how much we're seeing these stock prices and why we're having these conversations around stretch valuations? Yeah,
I mean, there's certainly a hype cycle. Hype cycle is more in the private markets. Okay. So we're talking venture capital and all that. Less so has that manifested, I think, out in public markets, mm-hmm. To speak. There is a lot of hype. I think a lot of the focus now has to be around what are the problems people are solving. The industry has spoken. We use tools like ChatGPT or whatever, mm-hmm. all the time. Nobody has an AI problem. So just plugging and throwing API or AI into your technology or platform isn't a magic solution to a higher multiple or anything like that. As the industry now starts focusing on what problems can we solve that weren't previously solvable before, but now in a world of AI are solvable, that's where we start seeing the rubber hit the roads. And mm-hmm. This is where, going back to Stifel and Raymond James, there are things that are possible today in 2026 that were not possible 2 or 3 years ago if mm-hmm. you just kind of revisit the whole business model in and around wealth, and what does that relationship look like, and what kind of service can these wealth managers actually be giving these clients when they've got AI assisting them in new, completely unbelievable ways from before. Yeah, it's efficiencies, isn't it? Such a fascinating chat. I could go on forever, but we've completely run out of time. But Justin, thank you so much for joining us. Please come back and do it again soon. That is Justin Whitehead there, Pebble Finance.